Hello guys, thank you Scott, hello everybody. Let me make sure my cohort is on board. Hello Andy.
Hello, Steve and Scott and everyone else.
All right, good deal. Mics are working, video's working. Let's get started here. So first slide as usual, the disclaimer, just making the lawyers happy, reminding you all that we are content providers. We're a software as a service company. Anything you see or hear in this webinar should not be construed as investment advice. Specifically, if you're looking for investment advice to cater to your personal family and your personal situation, it's best to seek out those guys with the licenses and the fiduciary responsibility titles. And of course, pay them the management fee. So again, please don't misconstrue this. This is not registered. This is not investment advice. If you need some investment advice, please seek out a registered investment advisor. So the first slide here, as usual, is our onboarding slide theme. We remind people that throughout the week, during the bell to bell, we have the Trade Ideas live trading room with Barry Anderson, sharing his desktop, using Trade Ideas, and broadcasting to a free group of a few hundred people, I might add. And within that free group of a few hundred people, there's a couple of really good crack traders as well that like to kind of jump in and make calls, and it's a great community. The best part about it is it's free, rivaling a lot of paid services out there from what I hear. So if you're not a part of the free Trade Ideas live trading room with Barry Anderson's desktop, please inquire at the end of this webinar. We'll give you some info, emails to inquire to. So there's that, all right? And we recognize that Trade Ideas is a very complex platform, 14 years in the making. There's a lot of different levels going on, and the learning curve, is not quick. So we're here to try and make that learning curve as quick as possible in terms of learning the program. Learning how to trade the markets, that's a whole other story. That can take 4 to 6 months, depending upon who you are and what your learning curve is, before you start to really see the forest through the trees in this crazy game we call the market. But continuing on with the You're Not Alone with Trade Ideas, we have the afternoon webinars, which you're listening to right now. Monday, Tuesday, Wednesday, Thursday, we hold a 5 p.m. Eastern webinar hosted by myself or Jamie or Andy or even Brad and Dan on Wednesdays. And then on Friday, we basically do not have any major webinars, but we're opening up our desktop from 11 a.m. 2 p.m. Eastern for anybody that wants to come by and ask questions. It's open forum, Q&A. You guys basically set the agenda, as opposed to these afternoon webinars where we kind of have our agenda set. And then lastly, I had just added a little blurb here. Let me move my mouse back up so that disappears. Monday through Thursday at the bottom, you'll notice we have what we call Trade Ideas University. It's 12 to 1:30 Monday through Thursday Eastern. Monday, Tuesday starts off with the basics. Wednesday gets more advanced, intermediate, and then Thursday gets into the advanced stuff. We do that every Monday through Thursday, so every Monday we start over. For more information, of course, you can email us at the end of this webinar. Scott will give you some contact info. So all those things together, we are here. We are making ourselves available to you all to try and help people get as up to speed as quickly as possible on our technology. All right. And because of all that onboarding and concierge and the attention we pay to the new people, we pride ourselves in a really nice parabolic subscriber growth. And lastly, before we get into it here, I always like to start my webinar off with the reminder that no man is better than a machine. However, and this is us, no machine is better than I'll add the word human. No machine is better than a human with a machine. And that's who we are. We're human beings with discretionary trading decisions to make, but we have the machine of Trade Ideas platform, scans, custom, and also the artificial intelligence to try and show us the road of least resistance and help us through the day. So let's just get right into it. As usual, we'll go over a market recap and what happened today. Not too much change from yesterday. For those of you who tuned in yesterday, it's probably going to be a lot of repeating here on what I have to say there. Go over the Holly recap for today, what happened over in the AI, and couple of observations from myself. I'll turn it over to Andy for some more specifics. Trade of the week is active. It is First Solar. We'll talk about the genesis of how that trade came about, basically on the heels of a couple bad weeks of not performing. So mixing it up a little bit, and then we're going to take that a step further and using the tactics of the swing stop on the charts as a possible contrarian entry. So we'll expand on that. And then as usual, it'll take maybe 5 minutes for some of your chart requests, usually no more than 5 or 6, kind of just depends on the crowd. But go ahead and hold those chart requests for the end when we get to that point and I ask for them. And if you do send in the chart request to look at, and I'll take a look, and it always helps to know if you're long, short, or thinking about long, thinking about short. Any type of color certainly helps. All right, so let me minimize that. And welcome to my desktop here. Let's just go right into the SPY, the S&P 500 proxy ETF. Again, for those that were here yesterday, I made a big deal in the S&P of a couple things. Primarily, this minor downward trend line is still way above our current levels. But at the moment, the price action in the spiders and S&P 500 seem to be fighting a couple other things. We've been thumping and bouncing off this 200-day moving average line early and often, and we haven't been able to break it. So that is demonstrating the downside of this technical wedge. And we've got the upside of the technical wedge, kind of this short-term downtrend. But what I'm also looking at is this flat horizontal line, which is a pivot line. It goes back to the breakout we had in January, and then it becomes support, and then it becomes resistance, and then it becomes resistance again. And so that's the dynamics and the anatomy of what a pivot line is doing. And right now, that pivot line, it's given the price action a hard time. You can see if I zoom in here, yesterday we tried to trade through that pivot line. Additionally, tried to trade through the blue 50-day moving average, which still has a slight downward slope to it, and was rejected. We fast forward to today. We didn't even quite get to the pivot line, but we got to the we got right to the screws of the declining blue 50-period moving average there, and once again got rejected. So yesterday and today, basically rejected at these same levels. So not a whole lot to show for today. Just a lot of wheel spinning and not really going anywhere. Because until we can get a close above these lines right here, and ideally a close above this downward sloping trend line, we're still kind of in the middle of no man's land here. And let me zoom back out and give you guys some food for thought here. What if we were to drop a ball right here and the ball bounces off of the support, the 200-day, and then bounces up, and then bounces again off that 200-day, bounces up with not as much amplitude the second or third time, and then bounces off the 200-day again, and here we are with a lower amplitude bounce. So, history is showing that gravity is slowly kind of catching up here to this wedge that is developing in the S&P. So I'm back to kind of neutral. We're not falling down, we're not breaking lows, but we're not breaking above our pivot highs or our levels of resistance when it comes to moving averages. So we're stuck in no man's land here, guys, and I'm not quite sure what it's going to take to break the wedge and the basic corner that the price action of the S&P is painting itself into here. But step one and step two is to get the S&P to close above this orange line, the pivot line, and to close above the daily 50-day moving average. Those two would be a great start going in the right direction, and then eventually this nice downward trending line. Over in the QQQ land, the NASDAQ land, I've kept these 3 little markers here as possible head and shoulders, which looked great a few days ago or a week ago down here, but here we are again. Let me just draw a horizontal line of that right shoulder. So we're butting up yesterday and today, close to that right shoulder, but no real attempt to break through. What's it going to take to turn bullish and for me to erase these possible head and shoulder lines that I drew? It'll take a close above this pivot level that I just popped in there, basically putting in and breaking out that prior high from a couple weeks ago. If we can do that and close and get the price action to close up here in the 168, 169 level, then I'll be the first to come in here and delete the possible head and shoulders that I'm highlighting there. But the NASDAQ, for the most part, also still in no man's land until I can get back above this horizontal line. And on the downside, it was getting close to its 200-day, but kind of repelling as it got close to it. The Russell 2000, as expressed in the IWM, had a good day today. And this is the one of the 4 ETFs, index ETFs, that is holding up the best. So believe it or not, guys, the Russell 2000, which is the measure of the small cap stocks out there, this one's holding up the best. The relative strength is showing itself in the Russell 2000. But again, I would like to see kind of the same thing that I asked in the NASDAQ. If we can get a nice close above that recent high, well, then it looks like we may have continuation, at least in the Russell 2000 IWM. So this one's holding up nicely. And the Dow was also kind of playing with this downward trending line, bouncing above, dropping back into no man's land, trading above, dropping back into no man's land, and back to trading above again. But what I see for the most part here, the Dow is really being held up again by that declining blue 50-period moving average. Yesterday it touched it and got rejected. Today it got close but got rejected. So here we are on a Tuesday, in the middle of the week. We're in no man's land for the most part in all of the indices. And yesterday and today are nothing more than a couple of little spinning, dancing dojis, signifying there was no winner or no loser, just kind of a lot of noise and elbows being thrown back and forth. I hear Andy off mute. Do you have something you want to add?
Yeah, I mean, well, not a whole lot. You've pretty much covered it, but it's interesting that, and I discussed this back in my webinar on last Thursday. You know, the four possible price actions when you have earnings season, and we're kind of experiencing the worst possible scenario for the bulls, where you have really good earnings. Really good earnings, and you really can't. It was at the time when I did the webinar, it was bearish price action. I don't know. I guess when you look at the overall, this year, we're making lower highs. So it is kind of bearish, but we're definitely not having any positive price action off these great earnings. And the point I'm making if we are still stuck in no man's land and earnings season, it's pretty much through the heart of it now and on the other side of the mountain. Man, I'm just not sure, what we could have to really, push this market higher. But the same might be said about pushing it lower as well. So we could be stuck in this range for a while. I keep thinking we're going to break down to the downside, but whether they keep defending the 200-day moving average and the spiders. So, I remain slightly bearish, but other than that, yeah.
It's funny. I don't know.
A long time, that's for sure. But
well, I haven't either. I've been neutral to slightly bearish for a while. It's funny you chimed in and said all that, because if anybody was in yesterday's webinar, I did the same thing. I was about ready to turn it back over to Jamie, and I said, "Oh, wait a minute, I forgot a big component here." And for those of you that were in yesterday's webinar, you can see how Andy and I are kind of attached at the hip and the brain sometimes. He's exactly right. You want to put a big check mark in the con category of being bearish, pro being bearish, con being bullish. Yes. What we're saying is the earnings are great, but the reaction is horrible. And it doesn't matter what the earnings numbers are. All that matters is how does the market receive it. Exactly. And we're seeing a lot of what we call over the years in the almanac of traders, they call it, ooh, that stock was priced to perfection. Well, why would you say that, Steve? Well, it went into earnings, it beat earnings handily, and the stock dropped 5%. So therefore, all we can conclude is the price of the earnings beating was already baked in. Another way of putting it, you guys have heard this a million times, buy the rumor, sell the news. So rumors of stocks having good earnings, and then you get into the earnings, and if you scratch your head and wonder, wait a minute, this stock just had great earnings, why isn't it up? Well, number one, don't argue with the market, because you're wrong and the market's right. And number two, just accept that that's the way the market is accepting it. And I've seen a handful of those earnings reactions, so as Andy and Michael and Jamie and Sean and everybody here. That's a major blemish on the checkbox for the bulls, and that's kind of the way I phrased it yesterday. So we do remain in no man's land, but I'm in the same camp with Andy. I do not like how these earnings are reacting, which tells me, where's the fuel for the upside? Is there any great white swans out there that are going to propel us another 10% higher that we're not ready for? I don't know. There's always that black swan that's out there, though. So anyway, that is that for the market recap. In no man's land, I like to go back to the benchmark of the S&P. First things first, let's get a close back above this declining blue line, which is a 50-period simple moving average. If we can do that, then maybe we can assault that declining trend line. And after that, well, then if you can close above that, the bulls should breathe a sigh of relief. But right now, it's kind of tight-chested. We could go either way. All right, so that is it for the market recap. Let's go into the Holly recap. I usually start at the 30,000 foot view. I noticed as I came in today, if I sort by time, one of the main things to look at for the AI is what's the directional bias. And now that I'm sorting by time here, and again, these are my West Coast time guys, so don't get fooled by those times. The first block of trades were on the short side. And then the next hour, the next block of trades were on the long side, and then we had a block of trades to the short side. So when you adjust and sort by time, it's kind of a clear block here of, you know, Holly's favoring short, and Holly's favoring long, Holly's favoring short. Well, today we had kind of a bifurcated market. We had the AI going short and long, which doesn't really give us a whole day's worth of directional bias. But, you know, we can save that for another day. There are days when Holly's only going short, and there are days like yesterday when the AI was only going long. And, you know, usually that directional bias, the term that I coined for the AI, is a great way to put your emotions aside and let the AI, which is an unemotional, statistically probable tool, kind of tell us what it's thinking without emotion. And so directional bias was kind of back and forth today. Nothing going on really in that front. The trade count was rather medium. You know, a trade count of maybe 5 to 8 trades is a slow day for Holly. And what might that mean? That might mean it's a good day to sit on your hands. If you have a trade count, you know, 20, 25 trades, and they're all in one direction, well, then the AI is kind of giving you a painting of a backdrop as to what the statistically probable direction of the market is and some trading ideas. But that's kind of the overhead view. I'll turn it over to Andy for some more in-depth views.
Okay. Let me
You want to use my screen or your screen?
No, I'll just go ahead and just take it real quick. It makes it easier.
Okay.
All right. Can you see it, Steve?
I can see it.
Okay, so what I've done right here is I sorted it by risk off. I'm gonna kind of focus on risk off. I like to focus more on risk off only because you know, that's what when we publish all our numbers, we use the risk off number. I like to tell people the risk on is great for teaching you a teaching tool so you don't have to keep going back and looking at charts. You can just look down at your blotter. If you want to call it a blotter, let's call it the open trades window, or this is all trades window, and you can see with the ones that just keep going, and it helps people to become, you know, better traders in a market that's conducive to holding on to trades. It can really benefit by keeping an eye on the risk on market. LCI was a great example. And this was a short, cuts like a knife. And let's take a look at the trade. And there you have it. What a beautiful breakdown on LCI right there. There's your entry at 14.95. Right before it broke out down to I know it was a 52-week. This may have been an all-time low. Yeah, I bet you it is. I have to go back and look. But nonetheless, you can see it breaking down there on the, there's the, basically at what was a double bottom and just crashed right through it. Here's your entry, a no pain trade that continued in your direction. Holly got out on the risk off at 57 cents. And then, but risk, if you held it, you know, we always say what you might want to do in situations like this when you do have a beautiful daily chart, okay, there's no support on the downside. Maybe you want to let something like this work for you, you know, and the easy way to do that is go ahead and bang out some profits, you know, maybe with Holly, and then hang on to the other half and look at that closed on lows for the day. So a beautiful example of a no pain trade that really could have paid you. And we always say man and machine, okay? Holly saw the setup, Holly let the alert come out. But as a trader, you should be able to focus and see what's going on over here on the longer term time frame and say, wow, this is really falling out of bed. And it was doing it on good relative volume as well. So a lot of things, you know, positive about this trade if you took this alert to the short side. We had a mixed bag today, you know, a lot, and we had some longs that really worked out. I'm going to go over a couple of them. You know, the CRM was, you know, your typical pullback alert. It's a strong stock pulling back. There you see the entry. It dipped a little bit lower, only a couple of cents. No, maybe about 6 or 7 cents. So there's an example of one that Holly may have called out that you might have actually got a better price. Not a whole lot of action there, but it bounced up. I love the no pain trades where there are very little pain trades on a pullback, and this thing kept going. And you can see where it was destined to go if you look over here on your daily chart. I always tell people, guys, you know, intraday charts can be great for entries, but when you're looking for where a stock may go, keep an eye on the daily. Real footprints in the sand over here. This is algorithm noise a lot of times. So keep an eye on the daily. We'll go over a couple of more here. AME on support. I love these. Look at these on supports. 3 in a row here, all positive on support. Right there's another one that went off. You could have got it maybe 10 cents lower. Could have got a better entry once again than Holly. And even if you didn't, pretty much a pain-free trade. And wow, just pretty much all day long to the upside. Fast. Let's take a look at Fast. It looks like she got out of this one at the right time. Yeah, there's your entry on support. No pain, and then bounced up. Holly got out right here. Now, if you had held on to this, you know, you might have flatted the trade, or maybe you wouldn't. Maybe you got out for a profit save and didn't make any much. But once again, let's look at the daily. Let's look what's going over here in the daily and look at all the resistance we had right here on the daily. So a lot of congestion on this stock. So maybe, I'm not telling, I mean, obviously you guys, I know what you think a lot of time. It's, you guys are speaking in hindsight. It's very easy. True, it does make it easier, but at the same time, you'll see that a lot of the stuff we're telling you is also marrying up in the daily charts. So the logic makes sense, okay? Just like I showed you, you know, on this AIM. Well, not so much AIM, or was that one Fast, was it? Yeah, that was one just looked at, CRM. Yep, that one right there. So there's, you know, keep an eye on the daily. It's very good. Now I want to talk about another trade because guys, we tell you all the time, look for these trades on possible swing as swing trades and not just day trades, because one of the stocks that I have been, it's one of my favorite stocks right now as far as a risk reward trade, and it's Under Armour. And I've been talking about this one for a while, not in the trades. I don't, you know, not in the webinars, but I want you to take a look at this daily, and Holly called it out today. And we say, you know, Holly is set up for, they look for these daily setups, and she called this out on a strong stock pulling back. Of course, right here the market got kind of noisy, and this is when we went to lows, so Holly got out for a reduced risk. But anyway, when you see trades like this and you look at the daily, and keep an eye on this one. It's a nice little kind of a elephant man, head and shoulder bottom, upside down head and shoulder.
Elephant man.
Well, the head's kind of awkward.
Where do you see the elephant man in the Rorschach block?
Well, I'm just saying the head's kind of jacked, but all right. All right, so, but anyway, look at this nice little base, and you do have an upside down head and shoulders here developing, and look at if it breaks above this level right here, around 17. This one could have some legs. This could be a great turnaround candidate, and the reason I call it a good risk reward trade is you have a nice solid support here, right where the swing exit is at 14. So you got nice strong support, and if it does get above this level, you know, I could see it going to 20 real easy. So keep an eye on Under Armour. I'm really liking that possible trade there. And Steve, I think that's about it. I don't think I have anything else to say about Holly. Great day for her though. Risk off, you know, $1.70 at a very sloppy market. Can't knock it.
I have a little bit more to show.
Okay.
Just to remind, you know, how was Holly used? I don't know of anybody that takes every single trade. That's not really the intent. The intent is kind of the bigger picture. What's the directional bias? What's the trade count? But of course, we always look at every single trade, and sometimes you might look at one and say, it just doesn't suit what I'm looking for, I'm going to pass. But again, it's man and human and machine. The AI is serving up statistically probable setups, and it's up to us to manage them. And what I like to tell people is in the long run, Holly, the AI, basically has the casino odds. And this is a proprietary back office chart going back to January 2017. And this blue line indicates what the S&P was doing graphically, and the green line indicates what the aggregate end of day total added on the prior day and so forth and so on of what Holly did in risk off mode. Okay, I've got two charts for you. This is risk off mode, but what I'm trying to highlight here is when we say casino odds, you know, they got the 0 and the 00 on that wheel, you know, in the long run, the odds are going to favor the AI, and that's why I like to call it casino odds. And just for an imprint, As Andy talked about risk on, what happens if we find a call that we really like and we want to hold it on longer than just 60 minutes or 90 minutes and maybe take it into the close? Well, let's put that chart up. Here's what risk on looks like going back to 2017. So it's actually a much greater improvement in terms of the points gained in the green line of Holly versus the blue line of the S&P. And then here's the volatility. We've seen 5 months of volatility in the S&P going nowhere, whereas the both risk on and risk off values continue to climb, as we would expect, because casino odds always win in the end. So I just wanted to give you guys that visual before we did, in fact, move on here. And it's that time. Let's move on. I like your Under Armour call too there. I think that could be one to watch.
Thank you.
Okay, trade of the week, First Solar. All right, where to start with this one? I think what I'll do to start with this one is I'll put up a chart of CN, which we all remember from a couple weeks ago. The trade of the week, breaking out of this nice little cup here, moving higher, only to be absolutely body slammed, for lack of a better word, by, and trust me, Andy and I were all over it this day. There was no news. There's no news driving this. This was, I don't know, this was predative. This is whatever you want to call it, predatory. It was just time for Sienna to take a breather. But where did it bounce, guys? Well, that swing stop was basically there, and it went through it by about a penny and then bounced vigorously. And I thought, okay, so let's go back to the S&P again. Here's the volatility that we have. It's nothing like it was back here with a nice buy the dip trending higher. We have lots of volatility, shoots and ladders everywhere we look. And then we get a trade of the week that gets triggered and bounced out within a day and a half. Notice that, interestingly enough, using that swing exit. It's called swing exit, guys, on these charts, and only on the daily chart. Now, not to be confused with this little gradient of color here. This one says swing. This one says smart stop. So let me go to the intraday chart, and this is the same gradient on the intraday chart. You're always going to see the smart stop on the intraday, no matter what I put in here. I could put in today's, First Solar, and we got a gradient. Okay, this is for day trading. This blue to orange. We're on a different time frame, so we're not concerning ourselves with that. We're looking for swing trades. Well, this swing exit shows up on every chart that you type in. If I put in, let's go back to CN. This is pretty much where that line was as we came into that, and the price was just beaten down to that level. Many stops were run, and then the buyers came in and found support. I really can't go back to this day because it's kind of intraday, but when you see these levels on the daily chart hit key levels like this, you want to sit and start studying, what's happening on the intraday. So we can kind of get a feel for it here. Let's just see if we can go back a little bit in time. All right. So for the most part, that was the line right there that corresponds to the swing exit of our daily chart. And so, if you were watching, we basically got stopped out on the trade plan by a penny, and then the bounce came, a little sideways action, and then boom, off to the races again. Well, what if nobody was in that trade and they were watching this intently, waiting for a possible bounce at a level where the stops could not get run below? You'd be watching the intraday price action. Well, that would have been an interesting day trade for that day, but the point is, that was not fun. It's probably not the last time it's going to happen, and it hasn't been the first time that's happened, but this is the market that we live in. Volatility rules and algorithmic market making rules. So coming into today, we thought, let's see if we can find something a bit more oversold, and maybe we can be that person that took advantage of everybody else's pain. And the perfect candidate for that was, yes, Christopher, it doesn't help that the brokers are selling out your stops. If you guys didn't realize that, you can log into E-Trade night before you go to work the next day, you put in your good till canceled open stop market order. Where do you think that market order sits? It doesn't sit with your broker. They're selling you all out, all right? They're selling you out and making money on your orders and giving it to the internalizers. And the great market algo internalizers have the entire 3D chessboard in which they can look at. And they start to see where the congregations are starting to coagulate and settle at certain price levels. And if they can just knock over those dominoes, you can have a stop run. Well,
you're just nauseating me.
I'm nauseating Andy because I'm speaking the truth.
I know.
And ideally, it usually comes out in the first hour of the day, and that's not bad, Chris. Christopher, I'm happy to try and let people know, what our thoughts are on that. So, roundabout, back to the trade of the week. I've got an old one that I've used here, just trying to find things that are oversold. So what this is let's go ahead and go to properties and take small borders off. Now you can see it's a T window. And this T window is called lower 20-day range. So you can probably already start to see we're looking for stocks using this custom scanner to see if we can find some oversold stocks that make sense. Well, a couple of reasons. First Solar kind of made sense, and First Solar did in fact show up on this last Friday. I could go to the history and dial in Friday and it would be on there, but trust me, if you read the email, you saw it on there. My single stock window tells me a few things. It tells me, first off, earnings were 7 days ago, -7. Interesting. Let's take a look. 1, 2, 3, 4, 5, 6, 7. What about, and I'm sure after a couple of, it's happened to us a few times, the old breakout turned into an absolute nightmare for 7 or 8 days of hardcore selling. But as we got down very close to this swing stop entry, the price settled. And the way the trade of the week was written was just get into the trade on Monday as long as it's above this swing stop. And so far, so good. The price is behaving at these levels. Hopefully, we're catching kind of an oversold situation here where we're essentially playing or preying off of the misfortune of the souls that bought the breakout up here. And so they've been decimated, and chances are a lot of people probably stopped out on Monday and were selling the shares of their disgruntled First Solar breakout trade that didn't work to maybe us guys who are trying to dial it back a little bit and be a lot more conservative, considering the past few trades of the week and the volatility knocking us around. So with that said, that was the genesis and the reason for the trade of the week. Again, we're right smack in the middle of earnings season, guys. And last thing we want to do is call a trade of the week that has earnings upcoming in a few days. Doesn't give us much time, and taking stocks into earnings isn't exactly trading. That's more gambling, especially on the heels of what Andy and I were just talking about, the way the earnings are being reacted to these days. You might see the headline and smile, and then you pull up the after hours chart and then you cry. So we don't want to be putting people in stocks that are coming up on earnings. So we had the fake breakout, the punishing 7 days of earnings reaction. And now we've settled at a place that kind of makes sense technically. And let me tell you guys, the better the entry, the easier it is to have staying power. Breakout entries, you're always kind of rolling the dice for this type of event. And we saw that very well, alive and well in Siena 2 weeks ago, and BVN, I might add. So now we're going to, flip the strategy. And again, this is us. This is the human and the machine. The human is, coming up with a strategy that has been knocked around and finding out by touching the hot stove what's not working. So let's figure out a way to find out what is working. So coming back to this top list here, it's pretty simple if we look at the configuration of what we're looking for. We have a thing called position and range for many different ranges, but right now the farthest we can really go back without going back a whole year is 20 days. And so I'm just kind of keying off the 20-day range and seeing right here maximum of 10%, meaning that if the 20-day low equals 0 and the 20-day high equals 100, we're capping it here at 10%. So we're finding stuff that's beat up on the 20-day time frame. A couple of other position and range. Position in 2-year range, I'm making sure that it's at least at the 70th percentile above its 2-year low. Position in 1-year range, I'm making sure it's 65% above the 1-year low. And the average daily volume is 1 million. Now, we could probably dial this way back to 300,000, and we might get some more returns in there. Let's do that. Yeah, we got a few more returns. So, if we look at some of these, click. All right, there is the smart stop showing the level of support. Interesting. SCCO, right there, just barely above the smart stop as well. So this one pierced the smart stop and is now bounced. That's not bad at all. No. That's a keeper. So what we're going to do with these guys is we're going to use the 2-punch. We're going to use the 1-2 punch. We're going to identify it using this, and then we're going to create a price alert, see if it can take out today's highs, and I'll call this bar reversal from 20-day low. Set it and forget it. Now tomorrow, if this thing triggers, I will know there's a good possibility that we've seen in many stocks. They get down here to these levels, they make a lot of noise, lift the rug, try and run the stops, and then a nice bottoming tail like that at the end of the day. You know, odds say, in my book, from my experience, that should portend and signal a couple of 2 or 3 days maybe of upward movement without a whole lot of volatility, something that could be participated in. So the idea is here, we're using this to find stocks that are oversold. That's not going to work. That's a stock that's being arbitraged. They're just waiting for the acquisition of the parent company. So guys, in case you didn't realize, whenever you see that kind of chart, that's what that means. They were acquired. The ticker symbol's still active. They're just waiting for the absorption of the parent company to absolve the ABLX ticker.
Put it back on that BSAC. I want to show one thing. Look at the day before or yesterday.
Oh,
See,
yeah.
but look, it did not
didn't fulfill its destiny.
That's right.
Yes.
It had to go take out those 2 weeks.
This was
the stops.
Guys, you might laugh that we say fulfill its destiny, but it really does have some weight when you consider that algorithms run the market, and somebody has to program those algorithms, and somebody that's programming those algorithms has to identify waypoints and locators and markers. So when they identify, when we identify a stock getting down, just because that candle looked great, well, it didn't quite reach its conclusion, meaning it didn't come over here and test these 2 bottom days. Whereas today, it did test it. And so that's kind of the theme I'm going to, morph into here for the next segment, because again, First Solar was the reason that we picked this. It was oversold. We're tired of being the ones that buying breakouts. We've got to learn that what doesn't work. That's part of successful trading. You've got to touch the stove a few times and learn what doesn't work, and then avoid that and work around it until it does work again at some point. And breakouts again will return at some point, but right now it don't seem to be working very well. Yeah, I'll be happy to share that scanner. I can do it right now. Let me just go ahead and pop it in there now before I forget, because chances are I'll forget, and then we'll be at the end and nobody will have time. I'm dropping this into the chat window. 20-day range hyphen oversold, and drop the cloud. Okay, so in the chat window, you guys can receive that cloud just by clicking on the link and then copying the URL and load from cloud. But I guess the point I'm trying to make here is you've got to recognize when things stop working. The First Solar breakout did not work, and many other charts look very similar. So we've got to downshift our strategy and start looking for things that are oversold and focus more on getting a good entry and taking and playing off the pain of others, and saying thank you very much for those shares. I trust the price down here a lot more than I trusted the price up there. And I'm not going to draw it, but you guys can kind of see kind of on the trend line there.
Yep.
Got a pretty invisible, nice looking trend line there. So definitely a much safer entry on this type of entry than would be buying the breakouts in this type of market. For whatever reason, the breakouts just don't seem to be working as well. All right, so that scanner is shared in the chat window for y'all. Let's take it a step further here. So yeah, I think we agree. Here's a great example, Andy. Here's one that we might want to watch, okay? Why? Because of what we just talked about. The swing stop is right down here. Maybe I go in here and I create a price alert and I call it swing stop entry. Their pain is my gain. Set that alert, and now I've got a viable set it and forget it possible alert. Let's say this triggers tomorrow. What am I going to do? Am I going to jump in and buy it? No. I'm going to do what I mentioned about Sienna. Watch the price action tomorrow. Watch as it trades. Maybe it goes below once, and then it pops back up, and then a bidder sits in there and holds it. And then you can look at this and say, wow, look at that. It did trade below. It did try to run the stops. It was unsuccessful in following through to the downside and running the stops. Maybe that's my cue for an entry using a daily time frame oversold condition. And that's kind of the reason why, I want to talk about this today, because momentum and breakouts are not working, guys. And if we can find, good scanners that will help us, look, here's kind of a double bottom on this DG. Could be one to keep an eye on. But I think the one that you pointed out, Andy, oh, it's not this one, but here's another great example. There's our swing stop. We traded well below. However, we didn't really quite get back and recover and close above. So that one might be a little bit suspect.
Biotech too.
Biotech, yeah. I forgot the one that you were talking about.
That's it right there.
So, this is the kind of stuff we're looking for, okay? Did it, in fact, test those prior lows? Did it test the swing stop? And a lot of times those things are going to marry up for you and could possibly give us, the ability to have a safe entry. Because once again, if I go back to CN, I'm sorry, not CN, if I go back to First Solar, the trade of the week, these people up here do not have the staying power that we have down here with using this entry. Okay, they bought the breakout. We waited for the pain. We waited for the pullback. We waited for the trend line. And again, that goes to my also steadfast rule that Andy and I have had over the years when it comes to earnings. One day of bad red candles after earnings is usually not enough. There's usually a few more days that towel needs to get wrung out. I mean, if you think about it, the guy goes to work, he comes home, he's like, oh, geez, really? This is it? Okay, great. Let me just go ahead and put in my order to sell here, and then tomorrow, and then the next. So sometimes it takes 2 or 3 days for the bad news and the feeling and the pain and the capitulation for people to just say, I can't take it anymore, get me out. So, buying after earnings one day, a red candle, it's probably premature. Give it a few more days. Let the weak hands or the remaining weak hands get squeezed out, and then we say, I'll take those shares from you down here on the trend line as opposed to a breakout. So that's really where I'm trying to go with this segment in the webinar, guys, is constantly taking stock of what's working, what's not working. Breakouts, not working as well. Good earnings results, not working as well. But being patient and maybe looking for things on the contrary. This is all contrarian trading, as they call it, guys. It's easy to run with the herd. Everybody's running, so okay, let's run. But it's hard to go against the herd in many ways in life. You don't want to be that black sheep, but sometimes the black sheep gets the money and takes it from everybody else who was in the pain trade trying to hold on to a breakout after earnings. So that was the last part of the prepared content for today. Basically using the and we can type in anything we want. I mean, if I type in Microsoft right now, okay, look at that. The swing stop is down here. It's actually keying right off of that moving candle back here. I guarantee you it didn't look like that on that particular day. But my point is, if I just start typing in stocks, these are all stocks that are kind of in the upper end of their range. So that's why I created this alert to at least give us a head start and maybe point us in the right direction of stocks that are either at, near, approaching, or have broken through and bounced back up through the Trade Ideas swing exit on the daily charts. So as you start to look through daily charts and you're seeing stocks, start paying more attention to this swing exit and what happens when the price hits it. Is it a follow through and the shorts get run, or is it a fake out and a bounce? Most recently, chances are it's been a fake out and a bounce. All right, thank you, Waleed. Yeah, it's a bit outside the box. The word contrarian is not always easy. Even buying a pullback, is a contrarian type of buy because you're buying the pullback. It's not always easy, but once you've done it a couple of times and you start to have some confidence that it works for you in the right direction, you're like, I only had about 15 seconds worth of pain in that trade, and now I'm in the money. That was great. I'm not used to this. I'm used to buying and being immediately in pain and hoping. So it all comes down to the entry many, many times. Anything you want to add, Andy, before we take chart requests?
No, it's totally right. You have to, in a market like this, you have to change it up. You have to, and guys, this is just a simple creation. I mean, you can do this with a lot of things. I mean, like my pullback. Remember my pullback above 50? I'm looking for like a 5-day, a stock trading in the lower part of its 5-day range. You could take something like that and use a 10-day range, a stock pulling back on a 10-day range that are above its 50 minutes. So there's so many things you can do with our software, to create these opportunities, taking advantage, people having to cough up decent trades. But you have to think like that. Yeah, you really do.
And there's no substitute for seat time and watching price action, learning charts, learning, resistance, identifying pivot levels, because Andy's right, change is the only constant in this business. Once you think you got the hang of it, market's going to throw you a curveball. And if you don't change, you're going to be in trouble eventually. All right, guys, it's that time. If anybody was sitting on a stock symbol and you want to have a couple pair of eyes look at it and give you some ideas, go ahead and throw it in there. And of course, let us know if you're long, short, or in or out or thinking. Chris is usually on the ball. And so Netlink, he likes it at 55. Let's see what he is seeing. NLNK. Oops. Oh, New Link. Sorry, New Link. All right, this is pharmaceutical preparation, manufacturers. Okay, earnings 2 days behind us. Okay, that would signify this probably this move right here. You know, it's slowly trending back up into the vacuum. It's riding that 10-period moving average. I don't want to see it break that 10-period moving average. It did it back here, but closed above, and closing is really the key. Got ahead of itself here on this day. So, you know, obviously the next bogey, the next target for this thing is to break above that. And if it can, the short float is 23%, meaning of the 28 million shares in circulation, almost 30% are short. They do not want to see prices go higher. If prices continue to go higher, they have to start thinking about covering, meaning they're going to have to buy to get out. So, I mean, it's all probably going to predicate on what it does when it gets back to this recent high. You may see a bit of grumblings and pushback and stock sales, but if it can get above and close above there, what happens on these types of charts is this void, this gap starts to become kind of a vacuum cleaner, a void, a vacuum void, and starts to pull and suck the price back up. And then it becomes a target to actually hopefully close that gap at some point. Refresh that chart.
Yeah.
Okay. So, you know, you're kind of in no man's land here, Chris. Just keep an eye on that supporting moving average. I mean, you can see the 10 period has supported this thing now for about a dozen days. So a close above that 10 period would not be good, Chris.
Below.
Below, excuse me. Thank you. You can trade below, but cheer that thing back on before the bell. And it's all about the close. How about RXN? Let's see what RXN looks like. Okay, had a nice bounce, 3-day bounce. Might be running into a little bit of fatigue. It's running right into the armpit or the underbelly here of these. So let's look left. We always say look left. What's going on left? Prior support could very well be coming. Look, it was support here as well. Then we broke support. And as I showed you earlier, well, hey, look at that. We actually probably kissed the underbelly of that pivot line today. So honestly, this is a fade the rip, sell the rip. If you wanted to go short, this is the kind of place where you turn your thinking caps upside down, guys, of what we were just talking about, the contrarian entry, all right? This might be a great short entry. I don't know if that's the answer you wanted to hear, Prabha, but if you want to go long this thing, it might need a few days to work itself out at this resistance level. If it can push through and close above, well, it might have better days ahead, but still lurking just above that pivot level are these moving averages. To me, it's come right back smack to this pivot level, which is support and resistance going back over time. So you're right on the pivot level. The odds, honestly, the odds would favor, I shouldn't say odds would favor, the stock is in an uptrend, a major uptrend. So, you know, if this was in a flatlining or even a downtrend, I would say the odds favor going short here. But since we're in an uptrend, I wouldn't say that. We're just right at the pivot. You just got to kind of see what it's going to do. If it's going to bounce back, and if you really want to get long this thing, I would wait until, ideally in a perfect world, this thing goes sideways for a few days, maybe even backs and fills a little bit down here at the 28, 20 level, then makes a second reassault on that line. And sometimes the second mouse gets the cheese because, we wasted a lot of energy on these 3 days. If you're the guy who's out there buying candles on the daily chart after 3 strong days of candles, I can pretty much guarantee you that's not going to last very long. The worst thing that could happen was that you get lucky on a couple of those and then you start scanning the market for those. But in the long run, my experience, and it's over 10,000 hours, means 3 green bars on the daily chart means this thing's probably getting ready to get a little bit tired. All right, anybody else? We just had those 2 requests so far. If not, then our work is done and we'll turn it back, but I'll give you another minute or so. All right, thank you, friend. Appreciate it. Pivot lines, guys. I mean, I'll take a pivot line or chart indicators pretty much any day. Price action. Price action gravitates and repels from pivot lines, and they're fun to find. What was resistance becomes support, and then what was support can become resistance, and that dance can go on and on. But here's a great example right here of how you would see a pivot line on this particular stock. Oh, let's go back even a little farther, shall we?
Yep.
Surprise, surprise. What happened right here? Resistance. Then we had earnings probably with a giant gap, and the price got slammed right back down below and closed right at resistance, traded above, closed back below, traded above, and then many, many days here became support again. So what was resistance back here, guys, eventually became support, which makes me say that right now, as we touch this line after a big bounce up, it very well could become short-term resistance again. All right, Rich, we'll do one more. Blink 182. I already know what this one's going to look like. Yeah, this is your low floater of the week, everybody. Run, stop, run, halt, resume, halt, resume, halt. You know, you can only play that game for so long. These are great trades for the dailies, but I'm sorry, but for the intraday, for day traders, the quick hitters, get in, get out, halt, get in, get out. But you know, once they've shot up a couple days in a row here, I'll tell you what, I'm gonna guess that I'm gonna predict tomorrow it's going to be maybe even a little narrow range. It's just going to kind of run out of steam possibly today. I don't know that. It's just my prediction, just because I feel like making a prediction. I don't know if I would buy something like this up here. I don't know the story. I don't know what's going on. I just know it's a super low float. 2.9 million shares. That's nothing. That's like a speedboat in the ocean. It's going to take quick darting moves left and right, unlike Intel or Microsoft, which would be a big oil tanker, slower moves. So be very careful on these if you're going to play with these. Play with small size. They can turn on a dime. I can guarantee you there are guys out there that Andy and I know are watching this thing, and they're probably salivating tonight, waiting for the intraday to probably maybe come in here and maybe break that intraday low and then hammer the shit out of it and short it. There's a lot of guys out there who just like to, as they say, short the junk. Find the deadwood that's running up, either a pump and dump. Maybe these guys tomorrow are going to announce, hey, they're going to announce more stock for sale. Usually that's the worst thing that can happen. You get into a nice mover with no news, and then you find out after market, after the close, that basically the price run up was a little bit of shenanigans going into a dilution event where they're going to issue more shares at a higher price, and then that immediately kills the rally. But trust me, there are guys out there right now just looking for a reason to short the hell out of this thing. Mark my words. So I don't really have any advice for something like this. It's just completely blew out of its range. I don't know the story, but you know, these things can be short-lived before they start to pull back. I'd keep it very tight and use small size.
And day trade only.
And day trade only, yeah.
Yep.
One more, and then we'll hit it for Scott. Disney, downward continuation. So Jake is saying, hey, I'm down with the fade the rips. Buy the dips isn't working in Disney. Buy the dip. Nope. Buy the dip. It worked for a little bit. No dips down here. So what we got, I won't draw the trend line because that'll take me 15 minutes. But we have kind of a trend line that's somewhat intact here for the most part. You know, this 200-day moving average is probably would be your upside. Get me out of this short position. It's not working. But for now, that little hiccup definitely could be used for turning around, just like on the long side. Grab that short side battering ram, bounce it up, get a shower, meal, a couple nights rest, grab that battering ram and everybody else, and come back down and assault that level again. So I like your thinking, more so than, hey, I want to short this thing as soon as it breaks the lows down here. That's called shorting in the hole. And shorting in the hole is usually fun for about half an hour, and then they bounce the hell out of it, just like they did to all these people on this day right here. So shorting after a bounce, fading the rip, is a much more probable scenario for short selling than trying to pile on the momentum side. Yeah. Okay, well, that's all we got for you. Thanks for the good questions. Thanks for the good chart requests. I'll go ahead and bring up this slideshow and bring Scott back in.
Yeah, thank you. A couple items on the way out. Want to make everyone aware that we have a podcast, and it's really easy to subscribe to. Just open whatever application you use to listen to podcasts in and search for Trade Ideas Podcast. Then add us as a subscription, and you're ready to get the new one on Friday. You can also download the last couple. We had a good one this last Friday, so check it out. You are going to want to make sure that you download the ebook. Steve and Andy both helped to co-write it, and it gives you 5 great strategies to use in a post-BTFD market. Just go to trade-ideas.com/ebook to get it. Plug in your email address. We'll send you the link to download. We also have a promotional code to save you money if you decide to start your subscription or upgrade. The code Mayflowers, all caps, just as you see it, is what you use. So go ahead and do that, either to upgrade or to start your subscription. It saves 15% off your first month or year. So take advantage of that before it expires. If you have any questions about anything at all, just email us, info@trade-ideas.com. You can also send Steve an email directly, steve@ or Andy is Andy@. Follow Steve on Twitter. He's @TodayTrader on Twitter. @TradeIdeas1 is Dan Merkin, our CEO. We also have @TradeIdeas and a few other handles you'll encounter if you follow some of ours. Facebook.com/TradeIdeasPro is the address to go to on Facebook to like our page so that you can share everything we post with all your friends. We'll have a recording of this up later on tonight or tomorrow morning. Thanks, everyone, for attending. You get an email about it later on. Thanks, Steve. Thanks, Andy.
All right.
All right.
Thanks,
See you guys
everybody.
next time.
See you Thursday.
Later, everyone. Bye.